a drug cartel moving millions through luxury real estate, an international scam funnels billions across borders, and a corrupt official launders bribes through shell companies. These schemes aren't just crime, they're part of an invisible financial war being fought across the world. And whether you know it or not, it impacts us all. This introduction will peel back the layers of money laundering, how it works, why it threatens global stability, and what's being done to dismantle it. Money laundering isn't just about hiding dirty money. It's about turning crime into power and deception into profit. It fuels criminal empires, distorts economies, and erodes public trust in financial systems. Understanding the process. So how does it work? Money laundering follows a calculated three-stage process: placement, layering, and integration. Placement. Illicit funds enter the financial system, funneled through banks, businesses, casinos, or deals. Criminals may use false invoices, smuggle cash, or even exploit cryptocurrencies. The goal is to separate the money from its criminal origins. Layering. This is where deception intensifies. The money is transferred through multiple accounts, masked by fake business transactions, and hidden behind complex ownership structures. Think luxury real estate, offshore accounts, and high-value goods like artwork. Each layer makes tracing the funds more difficult. Integration. Once the money is buried deep enough in legitimate assets, it's reintroduced into the economy, used to fund businesses, expand criminal enterprises, or influence political power. By this point, it appears completely clean. This process allows criminal wealth to infiltrate legitimate financial channels, creating an illusion of lawful business while financing deeper corruption. Red flags and prevention. How do investigators spot money laundering? It's not always obvious, but key warning signs include unusual transactions that don't match a business's operations, frequent large cash deposits without a clear source, companies with hidden ownership or opaque financial records, multiple transactions structured to avoid detection thresholds. Financial institutions, auditors, and regulatory agencies watch for these signs, using advanced technology and data analytics to track suspicious activity. But criminals adapt, using methods that evade conventional scrutiny. This is why anti-money laundering (AML) frameworks are critical. Strong AML measures help financial institutions detect, report, and prevent illicit transactions before they disappear into the economy. Know your customer, KYC. Verifying identities to prevent fraud. Transaction monitoring. Identifying irregular financial movements. Compliance and reporting. Ensuring regulatory authorities receive crucial data on potential laundering schemes. Employee training. Educating staff to recognize evolving laundering tactics. By enforcing these protocols, businesses can help stop financial crime before it spreads. The legal landscape. So, what's being done legally to combat money laundering? In the UK, strict financial crime laws hold institutions and individuals accountable. Key regulations include the Proceeds of Crime Act 2002 criminalizes money laundering and empowers law enforcement agencies. The Money Laundering Regulations 2017 establishes due diligence standards for businesses and financial institutions. The Criminal Finances Act 2017 strengthens investigative powers and increases asset recovery capabilities. Regulators like the Financial Conduct Authority, FCA, and the National Crime Agency, NCA, oversee compliance, investigate financial crime, and enforce penalties against violators. But enforcement alone isn't enough. Criminal networks constantly evolve, adapting new methods to exploit the system. The future of financial crime. Where is money laundering headed next? Emerging threats include cryptocurrency laundering, digital assets used to move money across borders anonymously, trade-based laundering, false invoices and manipulated trade deals hide illicit funds within international commerce, cyber-enabled laundering. Online transactions and digital marketplaces facilitate undetectable financial crime. As criminals evolve, so must financial regulations and investigative techniques. AI-powered fraud detection, blockchain analysis, and global cooperation are reshaping how authorities combat laundering schemes. But stopping money laundering requires more than just laws and technology. It takes vigilance, corporate responsibility, and global cooperation. Financial institutions, government agencies, and citizens all play a role. Because when dirty money enters the economy unchecked, we all pay the price.